If I had 10,000 ringgit cash sitting around, I would not leave this in a bank account earning me nothing. Obviously, I would invest this money. But I know a lot of people who are either, they don't know where to start at all with regards to investing, or they know a bit, but they're afraid that they'll make the wrong decisions. So in today's video, I will break down exactly how I would invest 10,000 ringgit in 2025. This is how I would do it. You might be a bit different than me, but I will show you guys what kind of investments I'm looking at to give you an idea, as well as how you can tweak this to your own investment goals. Let's get to it. But before we get to the investing part, there are a few things that you will need to check off. These are a few, check boxes that we need to do before we start investing. And the first of which is your emergency funds. I know, boring. But we need to have at least some cash saved up before we start investing. There's no point throwing all of our money into the stock market and then being forced to sell it and withdraw when we need that cash for an emergency. So you want to aim for anywhere between 3 to 6 months worth of expenses saved up in cold, hard cash, not physical cash. Just keep it in your bank account or whatever you want. But if you're asking me, do I have to save up a full 6 months worth of my expenses before I start investing? The correct answer to that is yes, you must. But you can cheat, because that's what I did as well. So back when I first started my job, I really wanted to start investing. I didn't want to wait for so long. So as soon as I got to 2 months worth of my expenses saved up, I started investing a bit of money. So it's, let's say, instead of doing 500 ringgit a month towards my emergency fund, I did 300 ringgit there and then 200 ringgit to investing, and I continued this until my emergency fund was fully stocked up. The next thing that you must cross off is any high interest debt. So this is specifically talking about credit card and buy now pay later. If you owe any money here, then you must, this one you can't cheat. You must clear it off before you start investing. The reason I say this is because with investing, we can expect maybe 10% returns a year, but credit card interest rates are at like 18%, which is crazy high. There's no way we're gonna beat that. So just pay it off before you even start your investing journey. And if we're talking about things like PTPTN loans, house loans, car loans, those are a bit more chill. As long as you're paying it off every single month, then I would say you can do this while also investing your money. So once you've got these two things checked off, then you're ready for the investing game. And this is how I would do it. So the first investment that I would make is in fixed income products. And for this, I will choose, obviously, ASB, Amanah Saham. I feel like there is no complete investment portfolio out there as a Malaysian without having ASB, unless you literally can't invest in it. But don't worry, I'll share with you guys some alternatives later on. Anyway, for this, I would put 25% of my portfolio, or 2,500 ringgit. This is meant to be my stable, low-risk part of my portfolio, which will help support it in case everything else crashes. So let's say we have 2,500 ringgit here with around, let's say, 5.5% dividends. For the first year, we can expect 138 ringgit in returns. I know that's nothing crazy. It's nothing life-changing. I'm not going to retire with 138 ringgit. But like I said, this is meant to just be a portfolio stabilizer so that you can go ham with all of the other investments. If you are not a Bumi Putra or you don't have access to ASB, then don't worry, there are other options out there as well. You can always put it in other similar products like Amanah Saham One Malaysia or even money market funds. Yes, the returns won't be as good, unfortunately, but it will serve the same purpose as well. One thing to note though is that if you're someone who, let's say, over the last few years, you've already saved up money, you've put it into things like ASB or even money market funds, and you have a nice amount of cash sitting there already, then maybe you might not want to add any more investments here. This is actually my scenario. So over the last few years, I have saved money in ASB, and I even have ASB financing, which means that my exposure here is already quite big. So if I wanted to invest any extra money, I wouldn't put the 25% into ASB. Instead, I would just put it into the rest of my portfolio, which I will talk about very soon. So if this is you, you can skip this part as well. Next up, let's get some Malaysian stocks in. So I know that over the last 10-15 years, the Malaysian stock market hasn't been performing very well. The returns have been a bit lackluster. But as Malaysians, we need at least a bit of skin in the game, right? And there are some pretty good options out there. Here, I'm going to put 1,500 ringgit or 15% of my portfolio, which means we don't have a lot of cash to play around with. So we can go with just one stock, or at max, if you want to push it, 2 different stocks. But which Malaysian stock will I choose? I will give you guys 2 different investment options which will have sort of different goals or objectives. But I guess with 1,500 ringgit, you could technically own both if you wanted to. But the first option will be the safe, the blue chip, the dividend play. And for this, I will have to go for Maybank. Their dividend is just amazing. It's over 6% a year. And the company has been performing well as well. I feel like, in a way, Maybank is kind of tied to the growth of the Malaysian economy as a whole. The second option is a bit more exciting. It's an ETF that I'm currently invested in right now as well, and it's called the Trade Plus DWA Malaysia Momentum Tracker. So this invests in Malaysian stocks that have the highest momentum score. Don't ask me what is the momentum score, I have no idea, but they have some scoring system that is using both fundamental and technical data. It has a very small AUM though, which means not a lot of people are investing their money here. I think it's only about 1.6 million, 2 million ringgit right now, but I still really like it because I like investing into momentum plays, and it does give me diversification because this ETF owns 20 different Malaysian stocks at any given time. And as of today's video, Maybank is one of those names. So I did do a video about this ETF a few months ago when I just found out about it, when I first started investing into it. So if any of you guys want to know more about this ETF before you throw in your hard-earned cash, then that's a smart decision. So yeah, you can check out this video right here. Before we move on, if any of you guys want to invest in Maybank, this momentum ETF, any Malaysian stock, and even US stocks, then you will need a brokerage account. And you can check out Mumu. So Mumu is regulated and licensed by Securities Commission Malaysia, which makes it safe for us to invest. If you guys want to sign up, you can use my link. I'll leave it down below. You get some nice freebies once you deposit and make your first transaction. Next up, we're going to move on to foreign market ETFs, and this is by far my favorite investment tool right now. So here, I'm going to be allocating 5,000 ringgit or 50% of my overall investing portfolio. Foreign stocks, especially the US, have been crazy. They've given amazing returns over the last 10-15 years. And the reason that I'm choosing ETFs instead of individual stocks is because I like the diversification. Buying ETFs, you can own so many different companies with just a small amount of money, and ETFs are just a lot easier for us to manage. So for this, I will choose two different ETFs to split my 5,000 ringgit, and the first of that will have to be VOO, which tracks the S&P 500, aka the 500 largest companies listed in the US. I feel like all portfolios need to have at least some exposure to this ETF. The performance over the last 10 years has been amazing, over 10% a year. And yes, we do want some exposure to the US just because they have been the strongest in terms of the economy, right? So for this ETF, I will allocate 3,500 ringgit. For the remaining 1,500 ringgit, I want to diversify outside the US. Yes, I think they're good, but I don't want to go all in. So for this, I will choose another ETF, which is called VXUS. So this ETF invests in nearly every single country out there except the US. So this covers the names of Hong Kong, Singapore, Japan, Europe, and many other countries as well. Finally, for my last 1,000 ringgit, for the last 10% of my investing portfolio, I will put it into alternate asset classes and I'll split it between Bitcoin and gold. Now, I'm gonna be honest because maybe some of you guys will watch my older videos, but I used to think gold sucks as an investment. I used to think, why would anyone invest in gold? Well, last year I changed my mind and I did put a bit of gold into my portfolio, and good thing that I did because gold right now is skyrocketing. For Bitcoin, I really think that everyone should have at least some exposure to this because the returns have been crazy. I know that it is very risky, it is very volatile, it's not everyone's cup of tea, which is why I think 5% is a sweet spot. Even I'm doing that with my own portfolio. From both of these, you can invest in it via ETFs as well. So you can buy it on Mumu. If you want to invest in Bitcoin, you can use the IBIT ETF, IBIT. And if you want to invest in gold via ETFs, you can use GLD. But if you're the type of person who doesn't want to invest in Bitcoin via ETFs, that's so TradFi, I want to own my own Bitcoin. I want to put it into a crypto exchange or even a hot wallet, then you can check out Luno. They're also regulated in Malaysia, so they are a safe option here. If you guys want to sign up for Luno, I'll leave my code down below as well. If you use this code to sign up, then both of us will get 50 ringgit once you make your first transaction. That's 50 ringgit worth of Bitcoin. So that's how I would invest 10,000 ringgit in 2025, and that's based on my risk tolerance. Obviously, you guys might be different than me. We are in all different scenarios. So let me show you guys how you can tweak this to your own needs. First, if you're someone who is older, let's say you're someone who is in your late 40s, early 50s, or you're young but you're risk averse, you don't like the fact or the feeling of losing money, then you can tone down on your risky investments to start off with. So maybe reduce your exposure towards crypto, reduce your exposure towards US stocks. You can put more of your money into fixed income products like ASB. You can also consider Malaysian stocks or REITs because those tend to be lower in volatility as well. But if you're the opposite, you're a risk taker like me, you want to go all in with your investments, or you're someone who is young and you know that you have a longer time frame if you're investing, then yes, you can pile on more of your money into the risky investments. So maybe, let's say you can reduce your exposure or even completely ignore fixed income products and go all into stocks or crypto. It's completely up to you. Just play around with this figure and then find out what works best. First of all, don't go into investing with the mindset of YOLOing or gambling your money. I know it's extremely tempting for us to invest into hype stocks, into hype crypto coins, and try to get 100%, 200% returns. Maybe it'll work out once or twice, but trust me, over the long run, this is not sustainable. Remember, investing is a marathon. It's not a sprint. It's meant to build our wealth over the long run, not over the next 2 weeks, right? If you guys want to gamble, then just go to the casino. Having said that, you can also be the opposite person, and unfortunately, it's also a mistake. So if you're someone who overthinks a lot, you wait too long to invest, you end up not investing at all, that is of course a bad thing as well. Instead, just come up with a plan, decide on it, and stick to it. It's not like you're gonna be stuck with this investment for the rest of your life. It's not like you buy the S&P 500 today and you cannot sell until you die. You know, you can always tweak it whenever you want as you figure out what suits you better. The most important thing is just start. I know a lot of people who I have a lot of friends who ask me, should I invest now? What if it's the high and I invest now and then everything crashes? And I always tell them I have no idea, because honestly, I have no idea. So the approach you can take is something we call dollar cost averaging, or DCA. So let's say we have the 3,500 ringgit and we want to put it into the S&P 500. Instead of putting the entire amount today, you can split it in 7 different months, 500 ringgit a month. So at least after your first investment, if the stock market crashes, then you'll be buying at a lower price. You can average your prices down. One thing that you must know though is that after your first investment, if prices go up, then yeah, you will be buying at higher prices. But to me, this just helps you mentally invest better. You won't be so stressed out, I guess. So that's how I would invest 10,000 ringgit as a Malaysian in 2025. Let me know down in the comments below, what do you guys think about this? Would you do anything differently? If any of you guys want to sign up for Moomoo, remember, use my link down below. It supports the channel and you will get some nice freebies as well. But thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.